Hey, this is Jim. It is 12:51 p.m. in San Francisco, California on June the 3rd. Please note that all discussions, analysis, and information presented are for general information on educational purposes only and should not be construed as financial or any other form of professional advice. So I've been having so many computer and network problems so far today that I'm just going to do a single video for both AMC and GME and get this posted while I can. So the chart that we have here in front of us is I would probably consider the most important as far as giving us some great insights into what's about to be allowed to happen. Because at this point, you guys know I'm a firm believer that this entire thing is just a WWE storyline, and that this will represent the 360 win portion of this thing to whatever extent we score a win. I still think this looks like it's highly controlled, if not 100% controlled. But here's the good news. You guys know from the past couple videos I've done, I mean, in the past, not the last two I've done, that the most important thing we were looking at was the on-balance volume and this idea of a pullback holding above the old resistance line, which then in theory becomes support, technical analysis 101, if we were going to have a chance for a mini melt up. So that is what happened. You can see the note here, we were looking for basically a pullback to the 605 million level for on-balance volume, and that would indicate, a kind of a pullback retest of this thick red downtrend line. And then if we were to curl back up again, in theory, there's really no resistance as far as on-balance volume sitting overhead. So, in other words, this is exactly what things should look like if they were going to allow a mini melt-up. So again, ended up pulling back to 645 million, not even all the way back to the 605. So if anything, we interpret that as more bullish, not less bullish. Quick review of sort of point of origin of that downtrend line, and here it is. It's this thick red downtrend line. It was the previous all-time high on balance volume. On balance volume moves down, peaks again August 11th 2022 before we have the whole CRS debacle, and then you see on balance volume continuing to post lower levels, which locks in this proper downtrend line. So at this point, what we were looking for is, number one, we really didn't want to see this happen. That had a really concerning look to it as far as a potential second reverse split coming in. But luckily, we were able to recapture and then actually overshoot that resistance pullback, and then again, per our note in the last few or previous videos that I've done, we wanted to see resistance become support, and that's what it looks like has happened. Also, a really good sign that we have our June zone of strength here sitting in front of us. And then again, I've told you guys over and over again that the July zone of strength, per my tools, is a more powerful zone of strength than even the June. So this doesn't mean that we can't move right up to the 34 or 40 retest level during June. If that were to happen, that's fantastic, because we'd be able to move the potential price targets for July higher. For the time being, we'll just leave this thing where it is, because they've done a really good job of holding price underneath that 1325 hidden retest level. That level was hit during the sort of 24-hour model that I track, but during the day session model, it was not hit. So let's assume that we're going to be able to move up during the cash market, day session, and revisit that 1325 hidden retest level, which would count as the first contact made on that hidden retest level. And then you typically would go through the vibration sequence. If you guys have been with me for a while, you know that the vibration sequence does not have to happen immediately after contact on a hidden retest level, but that is more typical. And also, it's something I personally like to see, because then we can sort of put these put all of that vibration sequence behind us and it allows us to move up to these higher levels without having to constantly look over our shoulder and be worried about the stock price dumping all the way back down again in sort of a wet blanket wash sale process that we've seen so many times in the past. So it's real obvious to see these hidden retest levels up here. As a matter of fact, there's, obviously price gaps that other technicians will be looking at that are very straightforward. But, they won't see the price gap here, which represents our hidden retest level at $34. And then they would see this gap, big gap here, obviously, but not necessarily this $40 level. In other words, they're looking for any type of a gap fill, lower end of it, higher end of the range, whatever. So again, this is the most important thing we're focusing on right now. And so far, on balance volume is acting as if we're going to be able to see this mini melt up during June and July. So as far as price targets go, we'll just have to play this one day at a time. And I'll be able to drill down into some of the shorter term models, time frame models, and forecast for you guys what I see on my side. And we'll see how quickly this thing can unfold. But that's sort of the most important thing I'm going to be tracking on AMC. As far as GME, we'll bounce over and take a look at what's going on here. Now, we have the advantage of the Nimoy terminal, and that was the way we were able to predict that even though price overshot by quite a bit, overshot that $21 monthly trigger in the Nimoy terminal, our downside velocity during the month of May was so overwhelmingly to the downside that it was pretty predictable based on history and the way the Nimoy terminal works, reverse engineered a Wall Street algorithm, that price would most likely snap all the way back down to that $21 trigger again and try to pin there during May. What we wanted to see is a close above that 2103 Nimoy terminal monthly trigger as we moved into the end of May and into the beginning of June, because then that erases all the rest of that downside negative velocity on the monthly velocity level and allows, sort of takes that wind in the face, fish swimming against the stream dynamic off the table, and allows us to release above that $21 trigger. Based on behavioral analysis, you guys recognize this fast market reentry into this big expanding megaphone melt-up fractal. Huge volume, 40.9 million shares on a 60-minute candle. And that's exactly what you'd typically see if price was about to melt up to a speed line attack based on this fractal in front of us. There's so much going on behind the scenes and, so many dirty tricks that obviously it's aborted for the time being, and they're right now forcing price back down. But you guys know, if you've been following my work for the past multiple weeks, that, the next move up, I told people would be an attack of this, based on history, would most likely be an attack of this 38.75 hidden retest level. That's exactly what we got. Now that will become vibration. Obviously, if this is going to be a more controlled stair-step type advance, then we'll see a full vibration sequence there at 38.75. There's also some work to be done at 41. But even if we go through an entire vibration sequence, we've got plenty of room here time-wise to move through those vibration sequences and also move up to the next hidden retest level at $69 during June. You guys can see sort of the way things are laid out for these timing boxes here during June and then into July. This is the June 2021 high, this horizontal line right here. And then, of course, this $120.75 is the adjusted all-time high. So you see my note here, $160 plus on any speed line attack moving forward. If price were to start to just melt up, then, again, it would be fairly easy to see price move through, not only through an all-time high, but significantly through the $120 all-time high, up to 160 plus on any speed line attack moving forward. You guys can see the trajectory of that speed line allows, for a $200 plus number, even mid-June, if there's going to be a re-entry and follow-through. There's nothing predictive about price targets moving forward until and unless we start to see a full-blown melt-up. But if we do start to see a full-blown melt-up through an all-time high, then my focus based on my methodology is this speed line, plain and simple. Now, a lot of times you'll see Fibonacci extension price levels sync up kind of nicely with contact on a speed line. So that's something else we can look at, the 168, 268, 368 fib extensions. But based on everything in front of us right now, we at least have the advantage of tracking the speed line. And we know, because the trajectory is so steep, that we're talking about, really big numbers potentially moving forward. So that's it. I'm going to just go ahead and render this video, get it posted, and get it out. And then once we figure out what's going on with the systems and try to kind of stabilize things, I'll try to drill down and make some other videos that I post later today or tomorrow. That's it from my side. Good luck.